All right, welcome back, everybody. Joining us now is Brent Wilsey from Wilsey Asset Management to answer the questions you may be asking about value and growth managers. Brent, good morning.
Good morning. How you doing?
I'm doing great, thank you. What is the difference between value and growth?
Well, that's a very important question because sometimes they kind of slide into that because growth has done very well over the last few years. So there's value managers who are not sticking to their discipline and they're putting in these high flyer companies that really not value companies, and it confuses the investor because growth is where you don't care what you're paying for the company. You don't care that they have a lot of debt. You don't care that their earnings are very low. So your risk is very high. If you're a value manager, a true value manager, you care about what you're paying for the earnings, the sales, the book value, the cash flow. You don't want to come with a lot of debt. These are important because you don't want that downside risk. So that's the big difference. And value managers, because they want to, I guess, sell more of their fund or their ETF, they're putting their companies like Apple, Tesla. And I got to point out, Tesla's a crazy growth company. I know it's gone up and so forth, but people don't realize right now Tesla at their market value is worth by themselves more than all the car companies combined in the world together. That tells you how crazy growth investing can be.
Okay, and I want to let our viewers know that you actually wrote an article in Forbes magazine online. It was published. 70 million people have read it. Why was it important for you to write this article, and how did it all come about?
I want investors to understand the differences because I went through the tech boom and bust. I went through the Great Recession, and investors keep getting burned because they don't understand where their money is going into. And if you think you're going to value investment, because you think it's going to be less risk, and all of a sudden the market crashes because growth investing, I mean, the worst 3-year period, they were down over 52% versus the worst time for a value fund, value investing, down 24%, so half that. So the losses are not as bad in value companies, and they will be there. But as growth companies, you lose 50% of your money, you panic, you sell out the wrong time, and you think you're going value, and you're not. You're getting the growth because that manager wants to be, showing he has Tesla in there, and Apple, and Amazon, all these high flyers. And what really is confusing for people is the way they justify it. They're all saying, well, now the industry is trading at, 30, 40, 50 times earnings. We're getting ours, at 40 times earnings, so we're getting a good value on that. That is not value investing. The markets have gone over for 100 years. You have got to look at what happens over the long-term history, not the last 5 or 10 years. And then also too, I like how they also say the whole industry is trading at these high levels. So it's okay if the industry is trading at 40 times earnings, we're at 30 times earnings, that's okay. No, that is not okay. And Jason, let me point out one other thing for people to understand. If you have a price earnings multiple of 30, that means based on what you pay for that company, it would take you 30 years to get back what you pay for that company. And by the way, Tesla trades at 399 times earnings right now.
Wow. Okay, any seminars coming up?
We're looking at perhaps one in January, but people can get more information on our website, which is smartinvesting2000.com. That is smartinvesting2000.com. And Jason, I do want to point out for people that if they're not sure what they have, go to a professional that knows the difference between a growth fund and a value fund that can actually determine what those businesses are in there and what they're being paid for. So there's help out there, but the average person is not going to understand this. Talk to a good professional that knows what they're doing.
All right, sounds to me like value is the marathon, growth is the sprint.
Warren Buffett was a value investor for many, many, many years, and he did quite well.
All right. Brent Wilsey from Wilsey Asset Management. Thanks, Brent.
You're welcome.
Have a great rest of your weekend. All right, we'll be right back.